Very good afternoon and welcome all to the Rushil Decor Q4 FY24 earnings conference call hosted by Asian Market Securities. From the management side, we have Mr. Rushil Decor, Executive Director, Keyur Gajjar, CEO, and Hirit Bhai, CFO. I hand over the call to Rushil Bhai for his opening comments, post which we shall open the floor for Q&A. Thank you, and over to you, sir.
Hello everyone and welcome to Rushil Decor all for the financial year ended 2024. I would like to thank MSEC for arranging this call and all participants for taking the time out to join the call. With me I have Mr. Keyur Gajjar, Chief Executive Officer, and Mr. Hiren Padhya, Chief Financial Officer. We shared and uploaded the investors presentation on the exchange and hope you all have gone through the same. We will start the call with some remarks on the performance of the company and discuss the promising opportunities we foresee for the next few years, post which we will open up the floor for Q&A. The year has posed many obstacles by increasing imports, an uptrend in raw material pricing, and a decrease in realization. But we stood strong and ensured that the challenges couldn't curb the growth that we have projected. Our quarterly revenues grew strongly by 9% quarter-on-quarter and year-on-year. This performance was primarily attributed to the growth in the volumes and increase in utilization level we saw in both the segments. Our Q4 volumes for the MDF and laminate grew 13% and 6% year-on-year, owing the operational efficiency at our plants. In Q4, the blended realization for the laminate and MDF stood at 634 rupees and rupees 23,535. Raw material costs, especially timber prices, during the year have been fluctuating overall on the higher side, which had an impact on our margins. Our EBITDA margins for financial year 24 stood at 14.21%. Going forward with the current expansion plan across the geographies, we shall continue to target our EBITDA margin in the range of 14 to 16%. In the rapidly expanding MDF sector, we solidified our position as a significant contender by efficiently boosting our production capabilities and expanding our footprints to meet the surging MDF product demanding nationwide. We have made a substantial stride. Our average capacity utilization for the Q4 financial year 24 stood at the 89%, reflecting our robust operational performance. However, in the month of March 24, our MDF segment utilization level went up to 96%. Also, our Chikmagalur plant sold 116% of its production capacity during the quarter. For the year financial year 25, we look to maintain the healthy utilization levels to 90 and 95% for the MDF plants. Over the course of the year, our tactical focus was to enhance our offerings within the value-added spectrum of the MDF segment. Our efforts are bearing fruits, as an evidence by value-added product contributing 42% in terms of quantity. Our MDF export volumes for the year 24 rose 61% year-on-year to 61,716 CBM. And now with our export obligations being fulfilled, we are positioned to sell our products at the better pricing and achieve better realization, offering us the flexibility to manage exports activity with desirable margins. In the month of April, we have increased our price by 7% and have received orders at the revising price for exports as well. In the laminate segment, we have witnessed a significant progress in the Q4 with the volumes increasing by 6% year-on-year. Utilization levels for our laminate rose to 90% in Q4, up to 80% in Q3. Demonstrating the strong operational performance, additionally, we managed to maintain the solid EBITDA margins for our laminate segment. which reached to 10% for financial year 24. As our greenfield project approaches completion, with the machinery now being received at our facility, we are poised to further boost up our growth in the segment. We project EBITDA margins for the laminate to be in the range of 12 to 15%. The project will focus on the jumbo laminates and aims to penetrate the premium markets such as Europe, USA, Australia, New Zealand, etc., enhancing our global footprints and market reach. Financial year 24 was also notable for our strategic entry into the plywood segment, thus broadening our product portfolio and offering our distributors more comprehensive range of the options. As we are in transition into 2025, we are set to significantly boost our production capabilities. Starting with the initial capacity of 300 boards per day, we plan to scale up to 1,000 boards per day by September 2024, and then further to 3,000 boards per day by September 2025. This expansion will enhance our market penetration, and as we are positioned ourselves as a one-stop solution for wood panel industry, our dealers and distributors are now better equipped to the market and set all product ranges under the Veer brand, providing a cohesive and a robust offering to consumer. This integration strengthens our brand presence and appeal, allowing us to capture the larger market share. PVC segment has grown by 96% year-on-year to 23 crores in the financial year 2024. We expect to grow in that segment over the year. During the year, we have made substantial strides in increasing our brand presence, successfully covering an extensive area of approximately 45,000 square feet plus through retail branding efforts. This initiative have significantly boosted our brand visibility in the market, aligning our goals for continued growth and market penetration. In the recognition of the importance of these efforts, we have allocated approximately 1 to 2% of our total revenues to support this activity. We also intend to continue investing in our strategic marketing initiatives to further enhance our market presence and drive the business growth. As we look to financial year 24-25, we are energized by the prospect in front of us. India's real estate market is booming, and the demand of the quality interior infrastructure products is also in rise. The company is poised for a dynamic period of expansion, driving a favorable industry trend and a strong demand outlook in both domestic and international markets. As we move into financial year 25, we are strategically positioned to capitalize on the opportunities, leveraging our robust market presence and operational excellence. We are well equipped to navigate and thrive in the evolving market landscape, maximizing our potential for the growth and profitability. Thank you for the continued support and believing in Rushil Decor Limited. We are excited about what the future holds and committed to achieving a new heights in the financial year 24-25. I would now hand over call to Mr. Hiren Padhya for the financial updates.
Good evening, everybody. Thank you, Mr. Rushil. I am pleased to provide you with an overview of our performance for the quarter 4 and year-ended FY 2024. During this quarter, our company recorded revenue of 233.42 crore. That is an increase of over 9% year-over-year. Our EBITDA for the quarter stood at 29.23 crore as against 28.20 crore in Q4 FY23. Our PAT for the quarter stood at 9 crore as against 13.60 crore in Q4 FY23. Here, I would like to mention that 9 crore is the figure which has been reflected in P&L. However, in current tax of quarter 4 and for the 12 months 2020-24 includes short provision of income tax of earlier year, that is FY22-23 of rupees 2.57 crore. If we include this amount or maybe ignore this provision, then our PAT will stand at 11.57 crore, which is slightly better than the previous quarter. The sales volume for MDF segment stood at 74,982 CBM, which is up by 13% year over year. Average capacity utilization level for Q4 stood at 89% as compared to 79% in Q4 FY23 and 72% in Q3 FY24. The MDF segment revenues contributed rupees 176.47 crore, that is an increase of almost 11% year over year, with an EBITDA margin at almost 16%. Domestic volumes stood at 58,281 and export volumes at 16,701 with blended realizations at 23,535 per CBM. The sales volume for laminate segment stood at 7.89 lakh sheet, which is up by 7% year over year. Average capacity utilization levels for Q4 stood at 90% as compared to 84 in Q4 FY23 and 80% in Q3 FY24. The laminate segment revenue contributed rupees 50 crore, slightly better than the previous quarter, with good EBITDA margin of 8.36%. Domestic volume stood at 3.26 lakh sheets and export volume at 4.62 lakh sheets with blended realization at rupees 634 per sheet. Coming to yearly performance, our company recorded a revenue of 844 crore, a marginal increase of 0.66% year over year. Our EBITDA for the same period stood at 119.91 crore as against 149.39 crore in FY23. EBITDA margin stood at 14.21%, that is lower than FY23. That was mainly on account of rising raw material cost and specifically the wood cost and heightened sales and marketing expenditure. We aim to keep the margin levels in the range of 14 to 16% in the year FY25. Our PAT stood at 43.10 crores as against 77.67 crores in FY23. As mentioned earlier, if we remove the provision for the previous year, that is 20-23 of rupees 2.57 crore, the PAT will stand at 45.67 crore. The sales volume for MDF segment stood at 260,380 CBM, which is up by 10% year over year. Average capacity utilization level for FY24 stood at 77%. The MDF segment revenue contributed 630 crore with EBITDA margin at 14.31%. Domestic volume stood at 198,664 CBM and export volume at 61,716 CBM with blended realization at 24,225 per CBM. Sales volume for laminate segment stood at 29.08 lakh sheet, which is up by 0.89% year over year. Average capacity utilization level for FY24 stood at 83%. The laminate segment revenue contributed 190 crore with better EBITDA margin of 10%. Domestic volume stood at 11.93 lakh sheets and export volume at 17.14 lakh sheets with a blended realization at 653 per sheet. Our net debt profile stands at 286 crore, which has been reduced from almost 400 crore in FY23. Our debt to equity ratio stands at 0.53 times. We are actively focusing on further reducing our debt to equity ratio level, mainly by ensuring ensure the strengthened financial positions. Regarding our inventory levels, we are committed to reducing them by 10% annually, and we are also in the process of implementing robust system to monitor and optimize our resource utilizations. This targeted approach is designed to enhance our operational efficiency and streamline our supply chain management, which will further ensure more streamlined operations and effective use of resources, which will finally leading marginal improvement in EBITDA also. During the year, we have also converted our present USD loan in Bank of Baroda amounting to $10 million into INR at the rate of 83.36 in March 24, which has also reduced our forex exposure substantially. Now the floor is open for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to join the question queue, please press star and 1. The first question is from the line of Parth Bhavsar from Investec. Please go ahead.
Hi, sir. Sir, thank you for the opportunity. Sir, I have a couple of questions. The first one is on guidance. So for FY25, for MDF and laminates, what sort of volume growth are we looking at?
I think in MDF we are almost like planning around increasing in our value-added business equally, and maybe this 96% is our target in March, whatever we achieved.
96% realization for the entire year?
Not realization.
Right.
Like in March, our
utilization
was 96%, so we want to achieve this as our target, 96%. And probably 50% we want to reach to value-added product. At present, we are around 42% in terms of volume.
Right. Okay. And for laminates?
Yes, laminate, I think you can see we are also in that segment also move very great in the last quarter, almost 90% capacity utilizations. And of course, there will be some new capacity addition in this financial year. So possibly we are planning to have some additional revenue from new capacity as well. Could be, I can say, around 25% or something.
25% volume growth, okay, for laminates, right?
Yeah, in terms of value.
In terms of value. And sir, volume?
Because in laminates, it's very difficult. In new plant, it's jumbo laminate, so it has a different size and different quantity and all this. So all the product mix are different. Current product mix, new capacity, you will have a different product mix. But yeah, I can say that we are planning to target around 20 to 25% growth in terms of value.
Okay. Sir, in terms of margin, what are we looking at, both MDF and laminates?
See, in terms of laminate, as we said earlier also, the present margin for the last financial year in terms of laminate is in the range of 10%, which will further improve in terms of the present product also, and the new project of that jumbo that will also add margin, because the jumbo, the laminate has a margin, better margin, compared to the present one. So presently we are at 10% around. New project will have around 12 to 15% margin. So overall there is a 100% increase in terms of margin by 1 or 2 percentage. In terms of MDF, again whatever EBITDA we have achieved, as also mentioned in the speech, overall we are just targeting to achieve EBITDA level of 14 to 16%. So here in terms of laminate, it would be in the range of 12%, and then the balance part would be in MDF. So overall, the guidance would be around 14 to 16% EBITDA for Rushil Decor as a whole.
Okay. Okay. Sir, there's a news around that, post April that, MDF players have, taken in price cuts. So if I had to understand, so what would be the price cut, if any, compared to Q4 FY24 average?
I mean, if we compare with the last quarter, as such, we didn't see much of a price cut. It's going consistent. Whatever the Q4 pricings, it's going same, I think.
Okay. Okay. Sir, since, the BIS norms have been, delayed, so is there any, pressure coming in the form of imports from the month of April?
Imports are there because probably in February it was low, but now it's again back. So 25,000 CBM per month import is there. But, you can see our volume business is consistent. So we don't see much a problem. Import is a very separate segment.
Okay. I would like to add here something. It's not about just the imports. It's also about the providing service to the end consumers, right? In imports, you have a minimum quantity that has to be ordered. Here, the quantities are not to be defined, and we can give the service to our customers as we want. And as long as we are targeting our sales by 50% OEM and 50% to the retail network, we can easily balance the cycle in terms of realization.
Right. Got it. And sir, one last question. Sir, in terms of timber cost, what it was in Q4 for you and what it is now, any increase seen over there?
So yes, in comparison to Q3, Q4, we have got a price hike of 10% in the timber prices. But in this current quarter, we don't see any kind of a price hike. We are trying to maintain our blended wood cost.
Okay, so the timber cost increased by 10%, but maybe because of the inventory, you won't see any impact in Q1.
Yes.
Right? Okay, so maybe Q2, Q3, this impact will be felt.
Yeah.
Okay. And sir, what was the per kg cost? If you could help me with that number.
So our Q4 cost was 4,222 per ton. Blended cost, huh?
Okay. Per ton. And what would it be now? Okay, 10% increase. No worries.
No. 10% increase was from Q3 to Q4. Now our current cost is at stable. As of now, we don't see any price hike in the wood cost.
Okay. Got it. Perfect.
We are trying to maintain our wood cost as we are maintaining it now.
But there is no price hike even in the market? Because Green Panel said there's some price hike in April, 7% approximately.
We have not seen yet.
In our region, it's not there.
Okay, sir. Perfect. Those are my questions, sir. Thank you so much.
Thank you. The next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead.
Yeah, hi. Hi, Rushil. So basically, a competitor of yours in their call was saying that in FY25 regarding MDF capacity, out of the estimated 800,000 cubic meters that's supposed to come up in FY25, around 200,000 of this is unorganized competition. So, like from organized players, this is the first time I'm hearing this, that unorganized competition is setting up capacities in a big way in MDF. So, what I really wanted to understand is what type of machinery will this unorganized competition be buying, and will they actually compete with the same product that the likes of Rushil, Green Panel, Green Ply is selling, and how does this really change the market for MDF over the next 3-5 years? How much unorganized competition do you expect coming in, and how does that disrupt, if it does so, the market for MDF and pricing?
So first of all, I would say about the machinery part. So this unorganized players mainly buy the machineries from Chinese, and those are all second-hand plants. Those are not the new plants. So they have the older technology. So the overheads what they have are slightly higher than what we have, and they have a bottleneck of producing only 7 millimeters to 25 millimeters of the raw boards. And we having a newer technology, newer machinery, we can produce the SKUs from 2 millimeters to 30 millimeters. Adding to this, having a continuous press gives an advantage in savings in terms of wood usage and in terms of resin usage. This is an advantage what we get by buying the new machineries rather than buying the second-hand machineries. And all the majority of the lines are coming in north. So we being placed in south, still we see our better competition as an organized market.
Correct, but being in the industry, what sense are the organized players getting in terms of in the next 3 to 5 years, how much capacity will these unorganized guys come with? Because right now the industry, as per the numbers brought out to us analysts, is that by FY25 the industry size of MDF will be around 3 million cubic meters. So what I'm trying to understand is that how big will unorganized become as a percentage of organized in 3 to 5 years of capacity? Would you have any sense of this?
I believe ratio will remain the same, because by that time organized player will also keep adding their capacity.
Yeah.
If you talk about the unorganized segment, around 8 to 900 CBM, I think 600 CBM is from organized player, and I think 2 to 3 lakh CBM is from unorganized player. So I think that ratio will be maintained. Even today the ratio is same.
Okay.
And I believe the capacity by the end of 24-25 it will be around 3.5.
Correct. Okay. Yeah, and just last question. So as of today, we see Rushil Decor as a company being mainly an MDF player with 75% business coming from MDF, and then now laminate capacity has increased and laminate contribution will increase. I'm just trying to understand, what is your vision for this company over the next 5 years? What will Rushil look like over the next 5 years? Are you planning on being majority? Like, are you planning on improving your proposition in laminates? Are you planning on becoming, a top 2 leading MDF player? Do you plan to maintain your position as it is? Do you want to get into new products? Could you just explain your vision on where you want to take this company over the next 5 years in terms of product basket and revenue potential?
Yeah, so talking about our vision in next 5 years, I've already been telling that we want to be a 2,500 crore company by financial year 29, right? And for that, we are aggressively striving for new product developments as well as the efficiencies and developing the new products, developing the new value-added products. That's what we are striving, and that's how we see our company. We are as a vision, we want to be the number 1 panel company, wood panel company. So we are striving for that. Yes. In terms of product, yes, we have been always seen developing new products. We have been seen as one of the players for setting up the new markets and in the organized way. We have been seen as a customer-centric company. So yes, we want to pursue that, and we'll be pursuing through our expansion in the product basket as well.
But are you going to be in laminates and MDF, or do you plan to get into forward integration?
Yeah, we are scrutinizing several products. It's not just, we have already announced the plywood, right? So we are already into one more segment now. We are already doing PVC boards. It was under R&D for several years. Now we have given a growth of, I think 96% year-on-year from last year. So yes, we are aggressively focusing on our new products as well.
Okay, great. Thank you so much for giving these detailed answers.
Thank you.
Thank you. The next question is from the line of Nikhil Agrawal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, I wanted to just a couple of clarifications. You said MDF exports, you had taken a price hike of 7% in Q4, right?
Yes.
Okay. And what could be the reason? I mean, we're hearing a price hike after a very long time. So any reason behind this? I mean,
yeah, so as I mentioned, we had an export obligation, so we have just completed our export obligation by the end of this financial year. So now we are targeting to move towards uplifting our realizations and by selling more value-added products, rather selling more of a commodity.
Mm-hmm. Okay. Okay, so you're exporting value-added products in the export segment. Have you started doing that?
Yeah, we were already doing it. If you see in our last quarter, almost we have done around 4,817 cubic meters of value addition.
Okay.
Out of total exports. Yes, so we are already doing it, but now we have started focusing to expand that range as well, like we are doing it in domestic. We did around 42% of our value addition business in terms of blended capacity. Now we are striving that for 50% by this year end. So that's what we'll be having the same strategy for exports as well.
Okay, great. And so regarding the price cuts taken by any of the players in April, you said that there have been no price cuts taken by any of the organized players as such in April?
Sorry, price hike?
Price cuts in the domestic market.
No, I said I think so far things are going. Time to time we all launch sales promotion scheme. So I think that's a continuous process in MDF market. So like a quarterly discount, annual discount, kind of things going on.
Okay. So what were the schemes like indirectly? What led how much did the schemes lead to? I mean, in terms of price cuts indirectly for you.
So if you see our realization of last quarter and this quarter, it's more or less same. So I think we don't see much increase in this promotion expenses. I mean, in terms of percentage price cut.
Okay, understood. That's it from me. Thank you so much.
Thank you.
Thank you. The next question is from the line of Karan Kamdar from Dr. Choksi. Please go ahead.
Yes, sir. Thank you for giving me this opportunity. Sir, I wanted to understand that with the export obligation getting over, what kind of leverage on price does it give us? Hello, am I audible?
Can you just repeat the question? Sorry.
Yeah, and so as our export obligation is over, what kind of leverage does it give us on price when we are exporting in the future?
So currently we have taken a price hike for 7%. And simultaneously goes for all the products for value addition as well. So currently for this year, yes, we are seeing a price hike of around 7 to 9% for exports.
Okay, so does that mean that we can reject orders below the price also going forward?
Yeah. That's what
and
we have been doing that.
Okay.
From month of April, we have been doing that. So we are very choosy about picking up the orders which have got a good value and good value addition for in terms of volume as well.
Okay, great to hear, sir. Great to hear. Sir, second is on inventories. So inventories as on March were about 225 crores, if I'm not mistaken. So how do we plan to bring those down? And what is our strategy regarding rationalizing the inventory days?
Yes, I think actually this particular aspect we are already working on for the last couple of months. And yes, there is an increase in terms of value so far as overall inventory is concerned. See, sometimes when we have got very good pricing in terms of wood, which is the main component of raw material, so there are a couple of period where we would like to store this particular part in terms of wood quantity, right? And secondly, we are also working on the plan and the direct monitoring on a weekly or monthly basis, where we would like to reduce overall quantity and value by at least 10% within the next couple of quarters.
Okay. Got it, sir. So would it be correct to understand that out of 225 crores, the major chunk could be raw material or wood, as you say?
Yes.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Rushil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. I hope I'm audible.
Yes, please go ahead.
Yeah. Hi. So just first one clarification. We were saying that in terms of MDF volumes, we want to have a 95% plus utilization. So on an average, I think for the full year, we had around 78% utilization. So does that mean we see like a 15-18% jump in utilization levels?
That's our target that we want to reach. Like in the month of March, we almost reached 26,000 plus CBM production. So we want to reach that 96% and we want to try to achieve a maximum possible production.
And we have the demand for such, and will the realization, the blended realization we have currently, will it remain stable for MDF then, because you're producing so?
Yes. If we talk about our quantity, what we sold in last quarter, it's around 74,983.
Okay.
CBM, including exports. And if we talk about our production, it was 73,489. So our production capacity was utilized together 89% for quarter 4. And we sold around 90% plus in the market. And as long as this blended realization is concerned, last quarter it was 23,900 something, and this quarter also it is 23,500 something. So there is no much difference in realization as well.
Yeah.
If we talk about like in last quarter, we only sold 59,000 CBM, and this quarter we have reached to 73,000.
Correct, sir. So just wanted to ask, with a more value added coming in MDF, so our realization should see some uptick, maybe a single digit, right? If that would be a fair assessment.
Yeah, it will definitely increase over the period, because at present we have reached to 42% now, and now our target is to reach at around 50%.
Okay. So on a broad basis, any revenue guidance that we can look at currently, like we are around 880 crores, so maybe for FY25 a broad based revenue guidance, anything that you would like to share, sir?
See, I didn't get you exactly. You are just asking for the guidance in terms of what?
Revenue, total value, sir.
Okay, value wise. See, as per our internal budget, etc., we are just targeting cross 1,000 crore turnover. Of course, with the same product which is already there in terms of MDF and laminate, plus 2 projects which we are already talking in terms of jumbo size laminate, and secondly the ply business. So after considering these 2 projects in process, first project will be, operation will start in the 3rd quarter of this financial year, and so far as ply is concerned, it has already started. So overall, we are just targeting 1,000 plus crore turnover in the year 24-25.
Okay. Perfect, sir. And so our EBITDA, we've said 14%-15%, correct, sir?
Yes, exactly. It is, then when I'm saying 14 to 16, that is overall combined EBITDA.
Yeah. Okay. Perfect, sir. So just one last question from my end, sir. Any risk that, you see that, that can, maybe impact our business, maybe domestic demand that we see currently, or, as a month of April has also gone by, so, any pressure on demand or realizations or something that you could see at your level, so?
Yeah, April is always a bit slow in this industry, but I think we are now seeing May it's picking up.
Okay. Perfect. Thank you so much, sir. That's it from my side. All the best.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Firstly, I wanted to know on the value-added MDF side, what is our volume and realization for this quarter?
It's around 42%, and the realization was 30,333. It's more or less 1% down last year. Last quarter it was 30,678. And if we compare with the last financial year, it was 27%. Now this is overall 42%.
Okay. And how do we see these prices moving in FY25-26? Do we expect them to move like in higher range?
I think, as I said, we don't see any much price cutting this year.
And in FY26 as well. So these are likely to stay in this range itself, right?
I think hopefully in 25, 26 we'll have some more factors for the consideration, I believe.
Okay. And since we are targeting like 50% of our volume to be coming from value added in FY25, so how much can we do the same number in FY26?
Actually, we want to reach 65%, 70%. We want to reach that part. And we are consistently working hard on that part.
That's very good.
Of value added quantity.
And coming to the non-value added side, so again, what was the realization and volume in this quarter?
Non-value added was around 20,000 and it was altogether, and volume was 31,977.
31,977. Okay, got it. And so on a total basis, how much utilization did we have in India?
So you mean to say production capacity?
Yeah, I mean in MDF, how much capacity did we utilize?
Both the plant together, it was around 90%, 89.1% production capacity.
Okay. And you have of course given the guidance for FY25 to cross 1,000 crores. Can you give a guidance for FY26 as well in terms of revenue?
I think it is too early to give guidance for 25-26 because we are just working on this new project. So maybe I think after a couple of quarters we'll be able to give you that guidance. As of now, I don't think it is possible.
Okay, got it. Those are my questions. Thank you very much and all the best.
Thank you. The next question is from the line of Yash Dedia from Maximal Capital. Please go ahead. Sir, you sound...
Sorry, we are not able to hear you.
Can you please pick up the handset?
Is it now audible?
Much better.
Yeah. I just wanted to know if our targeted capacity utilization is 96%, and so basis that we would be growing at say 15-20% in terms of volume for MDF, then what is the kind of expansion for MDF we are looking at for say 2 to 3 years down the line? This post 96%, there is a strain and limit to our capacity, and the growth in the market is always there for the MDF.
Talking about the further expansion in capacity, we are internally scrutinizing for the several products and the several projects. So as of now, once we are ready with the what kind of product we are looking at, then we can really give you an idea for further expansion or not. But talking about the MDF, yes, our strive is for next 15%, and next year we see that our machines are built for producing more than 100% capacity. If you see our Chikmagalur plant in the month of January, I think it produced around 120% of the production. And the same way our Visakhapatnam plant is also equipped for 111+% production. So we don't see any kind of a quantity or the volume submerge or we can consider. But yes, we are internally scrutinizing several products, and yes, once we are ready with the announcement, we'll let you know.
Okay. And may I know the reason for the increase in trade receivables this time around? It has increased from 119 crore to 164 crore.
Trade receivables.
In terms of value, if you are saying, then turnover-wise, it is almost same. But there are a couple of, I think, these slot where I think generally the trade receivables are increasing. But as I said, we are already working on in terms of working capital, where the foremost part will be the inventory and second part is the receivable. So I think within one quarter, I think we'll again have a normalized picture in terms of receivable also.
Okay. And in our exports, currently our realizations are around 19,000 to 20,000, which is correlated with the non-value added MDF. So going ahead, 7% hike is for non-value added, or you are seeing in combined blended realization that you are projecting by blending in value added and non-value added, and then the realization would be say 20,000, 21,000, 22,000 kind.
Yeah, we are considering the price hike for all the products, including value added and non-value added. So the 7% hike in exports are considering in all the products.
Okay, so the realization would increase more than 7% because the value added product would also come into the play.
Yeah.
Okay. Thank you so much. That's it for me.
Thank you. We have a question from the line of Mr. Karan Bhatia from AMSEC. Please go ahead, sir.
Yeah. Can you hear me?
Yes.
Sir, this is with respect to industry level capacity expansion. So can you share with us what could be the FY24 industry level capacity and the average capacity utilization at the industry level?
I think if you believe in last financial year it was around 2.8 or 2.9 million, and now I think on an average it was around 78 to 80% utilization.
Mm-hmm.
And we are probably talking about another addition of 800,000. So could be around 3.5, 3.6 million per annum.
Right.
However,
So you think
a new capacity may not come from April or May or something, some maybe in Q3, Q2, Q4, and the utilization level will not be 100%. So it will be 40%, 50%, depending on the things.
Right. And so after 25, there is no major capex planned, right? Or we keep hearing of new names entering this market.
So far we are talking about these are the confirmed source 800.
Right. Great. I think that's it from my end. Any follow-ups we have, Sagar?
No, sir.
So can you have the concluding remarks?
Sure. So as there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you for your continued support and belief in Rushil Decor Limited. We are excited about what the future holds and are committed to achieving the new heights in the financial year 24-25. Thank you.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.